name is Daniel from Global X Mirai. This time we're gonna talk about China market date update. First of all, on the macro side, so this year the China market recovery, I think, is mostly driven by export and travel activities, and it's part of most of the sell side, GDP upgrade. Even though that we see some export, disappointment in March, but that was mainly due to base effect. So in the recent trade activity data, we actually see the export rebound quite strongly, and auto has been one of the highlights of China export. I think from very soon, like 3 years ago, several years back, China has been the biggest auto importer, and then since last year, China has become the largest China auto exporter, overtook Japan as a has been always and will be continue to be a strong driving force for China's export. On second slide, we will briefly address on the overcapacity concern, and it has been the main issues for many analysts. China's overcapacity issues are mostly in the property related sectors and some higher manufacturing sectors. But if we see the destocking cycle actually started, in early 2022, and in fact, we actually have seen some inventory replenishment signs, for example, in battery size and earlier this year, and market leaders, who's able to maintain large market share, with economy scale and technology lead, such as CATL, actually has been able to see margin bottom out with given more stimulus policy, a trading policy, equipment replacement policy that could actually accelerate within the destocking and alleviate the overall overcapacity issues. And recently, we started to see the government to roll out more, overcapacity constraint policies, such as in the battery field. Next slide. I think this is one of the key reasons for the market rebound earlier this year, the stock market reform. So actually in the state council meetings in January, we started to see a critical shift in terms of attitude of top policymaker towards the capital market. The appointment of new chairman of CSRC, we think it's not only on support of stock market index level, the so-called national team buying, but more importantly, acknowledgement of the imbalance around financing capability versus shareholder return in the Asia market. It has been the roots of the issues of China's Asia market, and the so-called 9 measures, which has been, which is emphasizing on, for example, tighten IPO standard, deepen the listing reform, focus on corporate governance supervision, as well as regulations on major shareholders' sellings. We think these measures can actually address the long-lasting concerns over excess, equity issuance and insufficient, delisting mechanism in China's equities. Now, we haven't got time to update the slides, but Hong Kong markets has been rebound quite strongly in the past month. so far it was mostly driven by fund flows, foreign fund flows, due to weakening yen, as well as the rolling out of the AI themes from the US side. But in terms of market, it was mostly driven by multiple expansion. But since last Politburo meeting, we actually start to see that as an important turning point, probably for the economy and the market this year. First of all, the data of the third planner was finally announced, this time 3 months in advance. The implication to us is that likely the topics of the third planner session might have been relatively determined. Historically, we all know that the third planner session should be very important in terms of long-term economic structural reforms. So we think a possible agenda, in addition to say local, fiscal and tax reform, better promote the new productive force, and maybe we'll also address how to government provide better social safety net to unlock the potential, the spending potentials of China consumers, which has been a key issues in the past 2 years. And on more economy related topic, from the Politburo meeting statement, is that one concern I think from last year was that because of the first quarter, the regulator, policymaker think the economic data was good, so therefore they pull back some of the stimulus policy support. So for this year, we had was okay first quarter macro data, so market was a little bit concerned whether this time policymaker could pull back the stimulus policy that announced on 2 session, but this time they affirmed the supportive policy, mentioned using of ultra long-term special government bond as soon as possible, which indicate that we'll see more fiscal policy continue this year, and likely, very likely interest rate and triple R cuts soon. And also another very important signal, a pivot to me, is that regarding real estate sectors. In the Politburo meeting statement, it finally addressed the inventory issues. And if we combined with Vice Premier He Lifeng's statement in Zhou, that to me it shows that now the approach is pivot from building affordable housing, urban rural renovation, urban renovation program to actually the approach will be convert to digest inventory and make it to affordable housing. And to me, this is the ultimate issues of China property market as well as China's economy, because that can reverse the overall asset deflationary expectation, and that can also reverse the weak confidence towards the China economy, both domestically and overseas. Of course, from based on past 2 years experience, market and especially foreign investors might have some hesitation, and no one can be sure then how fast and how effective the policy rollout will be. there will definitely will be uncertainties and many issues. For example, how to implement it with market-oriented way, and how to avoid moral hazard. And different city, different province, different tiers of cities will have different situation. How to execute that? Where does money coming from, and who will take the risks, etc., etc. But we can see that the changes that the policymaker has now becoming more and more pragmatic. They tried, a different approach, but it didn't work. And now I think they are on the right path. So as long as they stick with the proactive response, we think it is okay. I think this has been what the market has been most concerned, and part of the reasons why overseas investors, long-term investors, have been sidelined of China market. So if the policy execution can continue carry on, and we believe the market recovery will have further legs to go. Now, regarding on the product, the Little Giant, apart from macro, the Little Giant ETF, so far, the market, as I mentioned, worries on the shift from small cap to large cap. Apart from national team buying, I think is the concern on those non-profitable small cap. Because of delisting rule change, that people worry that some of the small cap might got delisted. But I want to mention that our Little Giants are focused on high quality private names that with higher ROE, so with high shareholder returns, and with high quality. And actually, if you look at our methodology, it's the MIT screens those lists, which has requirement on ROE, R&D, and growth. So those names are naturally will not be a part of those non-profitable shady small cap names. And in terms of the performance of the index, the part of the underperformance, apart from the style shift, is also this index have a large weight. Many names actually are in the semiconductor universe. Semiconductor has its own cycle, and that was hurt a little bit because of the overcapacities in the semiconductor, as well as the semiconductor cycle itself. Now, given that we are starting to see a policymaker to address more on the overcapacity issues, and when the economy turn back, we think the cycle will turn back. So that parts of the index we think in the future will recover. And also, we don't have it here, but if you look at into the specific names, for example, some of the key holdings, this in the product is not only focused on semi. For example, the TFC, the top holding now, it is a supplier to NVIDIA, so which will benefit the AI revolution. The most closest names related to NVIDIA in Chinese stock market, and Bochu, Electronics, which is the leading laser makers in China, they benefit from strong laser exports and continue market share gain in high-end, a high-power segment, and very able to deliver stable margin thanks to its technology and competitive mode to fend off competition, especially in current oversupply environment. So there's a lot more names we can go through, and maybe in the future. But as you can see that this small mid cap product is very different from a broad-based small mid cap that will have high quality and high ROE, as will benefit from the potential any industrial policy headwinds. So I think that this is for this sessions, and hope to see you guys next time. I think that this is for this sessions.